Did Social Security benefits just become tax-free under the One Big Beautiful Bill? Well, kind of, but unfortunately not for everyone. The new law adds a special deduction for people that are age 65 and older that can push a lot of retiree Social Security tax down to zero, but it has some income limits. It doesn't change the core Social Security tax formula, and paychecks won't change in 2025. I'll show you who wins and who doesn't and the math of how it works. My name is Merrill Taylor and I'm a CPA. We help high earners and business owners cut taxes proactively. This video is for educational purposes and not individual advice, so you'll want to talk with your CPA before taking any action. So here is what has changed. So the One Big Beautiful Bill created a new deduction for people that are age 65 and older. The deduction is $6,000 per person, so $12,000 in total if both spouses qualify. For tax years 2025 through 2028 is where this applies to, so it's just a few years that it applies. It phases out above $75,000 of income for singles and $150,000 of income for joint filers, and it's available whether or not you itemize. That design is what lets many retirees end up paying no federal income tax on their Social Security, but the underlying Social Security tax rules did not go away. So there's an important nuance when it comes to this. Some headlines made it sound like Social Security itself is tax-free now. The law didn't repeal Social Security taxation. It added a senior deduction that can indirectly reduce or eliminate the tax for many people depending on their income mix. So let's do a quick refresher here on how Social Security is taxed. So before this law, and currently even after this law, up to 85% of your Social Security can be taxable based on combined income, also called provisional income, which equals your AGI, your adjusted gross income, plus tax-exempt interest, plus 1/2 of your Social Security. Now, if your combined income is under $25,000 for a single filer or $32,000 for a married filing joint filer, then your benefits are not taxed. Between those ranges and $34,000 or $44,000, up to 50% is taxed, and then above $34,000 or $44,000, then up to 85% is taxed. And those thresholds did not change with this new tax bill. We still have either 0 up to 50 or even up to 85% tax depending on your income, your adjusted gross income that comes in there. So why does the new deduction make Social Security feel tax-free? Well, it's because the age 65 plus deduction is allowed even if you don't itemize. It reduces your adjusted gross income, which lowers combined income. That's how many filers end up crossing below the $25,000 or $32,000 thresholds, so none of their benefits become taxable. So, if you're above those thresholds, let's say you file a joint return and you're above $32,000, well, a portion of those benefits are taxable. If this $6,000 or $12,000 deduction pushes you below those thresholds, then automatically everything becomes non-taxable. So people that are in that really tight kind of range could see a really large benefit where they were taxable before and now they are no longer taxable because of that deduction coming through. So let's do a couple examples here just to kind of model it and show how it works. So example 1, we have a joint filer. Both are 65 years or older. Social Security is $28,000 and their other income is $25,000. Before the new tax law, their combined income is $25,000 plus 1/2 of Social Security, which is the half of the 28, so that's $14,000, which gives them a total income of $39,000. So some benefits are taxable to them because they're above that $32,000 threshold. With the senior deduction, you subtract $12,000, so AGI drops to $13,000 in that case. Combined income becomes $13,000 plus the $14,000, which is half of the $28,000 Social Security. And now their adjusted gross income equals $27,000, which is now below the $32,000 threshold, so 0 of the Social Security is taxable. So that's an example where it took it from being taxable to being non-taxable based on that deduction, that new deduction in the One Big Beautiful Bill. Example number 2, let's say that we have a single filer in this case that's 65 or older. Their Social Security benefit is $18,000 and their other income other than Social Security is $20,000. Now before, the combined income is $20,000 plus $9,000, that's half of the Social Security, which was $18,000, so $9,000 equals a adjusted gross income of $29,000. So again, some benefits are taxable because they're over that threshold for a single filer. So after the $6,000 deduction, the AGI drops to $14,000 and combined income is $23,000. Since they're now under the $25,000 threshold, they no longer pay tax on Social Security. So that's an example of a single filer that would fall under that threshold. So who qualifies for the senior deduction? You must be 65 or older by the end of the year. You must have a modified adjusted gross income at or below $75,000 single or $150,000 joint for the full benefit. Then it phases out above that. You include Social Security numbers on the return. And if you're married, you generally need to file a joint return. It doesn't work if you're married and file a separate return. If you're under 65, nothing changed for you. The Social Security tax formula is the same as before. This deduction is not available to anybody under 65. So about the claim that most beneficiaries will owe tax, that's a political talking point. The deduction actually helps many people, but results depend on your combined income and whether you meet the age and adjusted gross income rules. When do you actually see the benefit for this? For 2025, the withholding tables, if you're having withholding done on your Social Security, which not many people do, but some do. So if you're doing withholding on your Social Security, the withholding tables are not going to change. So you actually won't see an immediate benefit in your withholding. You're not going to see your Social Security benefits that hit your bank account increase because the withholding is going to stay the same. So it won't change for now. You'll see that tax savings when you actually file your 2025 return next year in 2026. If you want to smooth it out, if you want to get those benefits earlier, you can withhold from your Social Security using a Form W-4V at 7%, 10%, 12%, or 22%, or adjust your estimated tax payments. Now, also keep in mind state taxes. Most states don't tax Social Security anyway, so no change there, but some do, or they have special rules that go along with it. And if you split your time across states, then you want to check the rules for both of those states. So a few planning moves to consider. So you want to manage your adjusted gross income. This deduction helps, but Roth conversions, capital gain harvesting, asset location reallocation also affect your combined income. So you want to coordinate your required minimum distributions and pension income to stay under the $25,000 or $32,000 breakpoints when possible. If you're charitably inclined, use qualified charitable distributions from IRAs to reduce your adjusted gross income directly and protect your Social Security from taxation. And you want to monitor Medicare, IRMA, and lower your AGI can also help with those surcharges as well. All right, so a few Q&As here. So if you're under age 65, do you get the deduction? The answer is no. The new deduction is age-based and your Social Security taxation follows the old rules. Another question, did the thresholds for Social Security taxation change? Answer to that is no. It's still $25,000 and $32,000 for the first tier and $34,000 and $44,000 for the higher tier. Those remain unchanged. Another question, is Social Security always tax-free now? Unfortunately, no. The deduction helps many people, but higher income seniors or those under 65 may still have taxable benefits. And can you see this deduction in your monthly check right away? Unfortunately not in 2025, unless you file a Form W-4V or tailor your withholdings in some sort of way. All right, so what do you do next? Well, if you're age 65 or older this year, run the combined income math with the new deduction and decide whether to adjust your withholding. And if this information was helpful, make sure you hit the like and the subscribe buttons and share this with a friend on Social Security, and we'll make sure to keep you updated as the IRS releases more details.